There are two types of life insurance. One you pay into and only get to use when you die, and the other you pay yourself and you get to use while you're still above ground. Hi, I'm Rebecca. Thanks for joining me on the Mama Lorian Way and 30 Days of Money Tips, where I'm sharing tips and strategy about money and wealth building for 30 days. Today, talking about a system that banks use, corporations use, wealthy people use, and you can use too to build wealth while you're alive within a life insurance policy. This life insurance is different than term life, what we usually think of. The one where you pay monthly payments, and if you stop paying, you don't get anything out of it. And the only time you do get anything out of it is after you die and your heirs get to party on your behalf. This policy I'm talking about is called whole life insurance, and it's got to be set up a certain way. And it's so powerful, and it's a 200-year-old system, but it's so powerful, banks take these policies out on their executives. It's called bank-owned life insurance, BOLI. You can look it up. Corporations do it too, corporation-owned life insurance, COLI, because it's powerful, it's wealth building, and it's becoming your own bank. This is a nugget-sized view of how it works. Basically, you put in a chunk of money, and it's got to be a pretty sizable chunk of money to start your policy. Then you have regular premiums, and let's call them deposits rather than payments, because you are putting that money into your policy for you to use. Now, so far it kind of sounds like a savings account. There is a death benefit, and that's going to benefit your family for sure. It's a great bonus, but it's not the primary reason for having this kind of life insurance. It's the wealth building that it can create within it that is. So now you've put in your deposits, you start earning interest, uninterrupted compound interest, and dividends inside your policy. Then you can take loans out for yourself against your policy, and you become your own bank. And that's powerful. By doing that, you can actually recapture all the money you've ever spent. Imagine buying a car with a loan from your policy. You pay yourself back with interest, always pay yourself back with interest. And in a few years, not only do you have a paid car in your driveway, but you have all the money that you paid for the car inside your personal bank. I'm going to do some numbers because sometimes it's more easy to imagine concrete things. So say you buy a $25,000 car. You take a loan from your whole life policy for $25,000, and you're going to take it out for 5 years with 5% interest. Over these 5 years, 60 months, you pay yourself back $28,306. That's the same amount that you would have paid a bank. But in this case, after the 5 years, that paid for car is in your driveway, and you have that $28,000 in your personal bank. You've paid yourself back. All right, another thing, and how this loan works, the insurance company loans you up to the amount you've put in and puts a lien against your death benefits. So you're not taking out your own money, you're taking out money that's in the life insurance coffers, that company's coffers. The lien is against the death benefits, meaning you don't have to pay the loan back. It's just deducted from your death benefit amount. You know, and these other things is you can actually, if you end up not being able to pay for these policies, you can sell them or you can cash out. And in that case, your loan would be deducted out from your cash out. But that said, it's definitely better to pay yourself back with interest. Then you can have more funds to buy your next car or your new refrigerator or whatever. And it's a big disclaimer, this is a marathon, it's not a sprint, it's for family legacy building. And then maybe your kids won't even need the death benefit because they've gotten so smart about how to use everything. There are tons of nuances and specific ways to set these up. I'm using a company called the Money Multiplier to sort out our policies, and I'll put their contact in the comments. This is a book that you can get from their website. Their services are free. They get paid in commissions from the life insurance policies. So there's no money up front for you. Anyways, thanks for joining me. 30 days of money tips. I'm Rebecca. Please like and subscribe, and I'll catch you in the next one.